meeting a lot of people from different industries and different walks of life. And everybody, the whole world, it seems, is talking about India. And everybody is so excited about India. And everybody knows that the next decade, 2 decades, somebody told me 4 decades belong to India. So, and this is for true that the next years, coming years are going to be for India. We've been waiting for this moment for probably 2 decades, but finally we can see the light at the end of the tunnel, and these decades are definitely going to be for India.
Okay, so the next few decades could belong to India. That's your thesis, and that's the feedback that you say you're getting from people that you are meeting there at the World EY Entrepreneur of the Year Awards. But let's now talk about the group, Mr. Jindal, because the revenue of the JSW Group, that's JSW Steel and Energy combined, has grown at a CAGR of a little over 17% over the last 5 years between FY19 and FY23. Steel, cement, infrastructure, energy, paints, revenue of $22 billion. You talked about the growth projections for India. Let me ask you about the growth projections for the group. What could the group look like in the next decade?
It's very difficult to project or to predict, but you know, we as a group are, as you have just now mentioned, all the companies in the group are all basically in the infrastructure space, and is very closely connected with the growth of the country. So as India grows, we will grow faster because we have to meet the needs of growing India. And so therefore, I'm very optimistic that in the next 7 to 10 years, as the country gets to close to $10 trillion mark, we will be also up there. I don't have the numbers in my head right now, but we will match up the India's growth or you know, better that growth.
Okay, you know, let's talk specifics, Mr. Jindal. And what we are seeing today is a lot of Indian conglomerates, a lot of the large Indian legacy businesses are now diversifying into new businesses, especially more consumer-oriented businesses. And that's been the case as far as JSW is concerned as well, whether it is the renewable energy transition or the paints business. These are new but adjacent areas that you're getting into. What could we expect in terms of new bets from here on, or do you think that you have enough on the plate for now?
No, I think it's the need of the hour that one gets into consumer business as well. But our strength lies in the core sector of the industry, and that is where we are very much focused as JSW. But simultaneously, we are also investing in areas which are consumer oriented. But because that does not call for very large capital expenditure, so therefore we want to you know, check out that sector as well. And most of the groups in the country, as you rightly said, are entering into consumer durables, even though they were in the infrastructure space.
So when you talk about a consumer bet and the play on consumption, Mr. Jindal, what will that mean? You know, it's been about 4 months since our last conversation where you said that you were revisiting your plans to get into the electric vehicle business at the premium side of the electric mobility car space. Where are you on that plan at this point in time? How close are you to being able to take that forward? There's been a lot of rumor and speculation that you could possibly be eyeing MG Motors as well. Is there any truth to that? And where else within the consumer space are we likely to see you make a play?
So there are many areas that attracts us, that are potential areas. For example, as part of our renewable industry, renewable journey, we are looking at battery to manufacture batteries in India. That's an area which is a very large area, and we feel that we are pretty kind of organized to be in that sector, because it is a sector which is up our alley, and we understand that business very well. So that's one area we are looking to do. On the electric vehicle, EV, our strategy, we are continuing to work on that strategy. We are not yet, we haven't yet closed any deal, or we haven't yet decided or put our finger on the final product. But we are going to work on it over the next 6 to 8 months and try and see that we can build the electric vehicle. I'm very excited about this opportunity for India, because I feel that over the next 7 to 10 years, electric vehicles are going to be the major mobility driver in the country, and we want to be there when this idea or when this opportunity arises.
Well, the opportunity is here, Mr. Jindal, and you've sort of sidestepped my question on whether you could potentially be looking at a deal with MG Motor. I mean, you're somebody who hasn't shied away from acquisitions across your businesses, and you've gone after distressed assets in your other businesses. I'm not suggesting that this is a distressed asset, but is there any truth or any possibility of inking a deal with an existing electric mobility player?
So Shereen, always it's an easier route to take through acquisition, because, and especially in an area where you are not present. In a steel business, it is not necessary that we will go for acquisition, because that's okay. But in a new area, whether it is battery or EV or something else, which is not our domain industry, acquisition could be an area. But through acquisition, it also gets a little bit more complicated, because it is not designed to your specs, and you may not really get what you want. So it's both ways. And on MG Motor, if you are asking me specifically, because I don't shy away from difficult questions, that's also in one of the is one of the lists in our list. Could be one of the options if they want to sell, but I'm not sure as yet.
Okay, a majority stake, is that what you're eyeing as far as MG Motors is concerned? And what else is on that list, sir? You said that that's one of the contenders on the list. What else is on the list? So when I said list, what I meant was that there are many opportunities, global opportunities, which they all want to, they are knocking at India's doors, and they are looking for good partners in India. So we could partner up with European companies, Japanese companies, Chinese companies. So there are so many opportunities which are existing today, and there are not many large groups in India who are right there to grab that kind of an opportunity. So JSW is a good sort of organization to tie up with. Okay, you talked about partnerships potentially with European companies, with Japanese companies, even with Chinese companies, and I would imagine that that's in the context of MG, Mr. Jindal. I want to understand from you, during the COVID-19 pandemic, you had made it very clear that while you are a believer in free trade, you had said that our rules of engagement, especially on economy and business, needed to be very different with China, because in your words, China had not behaved properly. Now, is there a change in position there as far as dealing with China and Chinese business is concerned?
So there are two things. One is that in EV, China is way ahead of competition, global competition. So therefore, China becomes a natural ally as far as new technology in battery and electric mobility is concerned. So that is one part of the story. On the other side, that if we have hostile relationship between India and China, then obviously we will not work with the Chinese. That is very clear. So as a group, we have always taken that position. But to build India, if the technology is available only in China, or that kind of technology and the cost structure which the Chinese can provide us and the Europeans cannot, then we have to think twice before we really decide. So I think it's a difficult question to answer, but yes, that is my position.
Okay, so you're saying that you have to be pragmatic, and this seems to be a change in position when it comes to China. But, let's talk about the overseas ambitions of the group as well, Mr. Jindal. And on the steel side, what we have seen, especially even as far as your peer group is concerned, that there was a lot of enthusiasm with which steel companies looked outside of India and now are looking inwards and are looking at expanding inwards, including, of course, JSW. You've done a bunch of acquisitions, whether it is Monetis Path or Bhushan Power and so on and so forth. I want to understand from you, over the next 10 years, how aggressively do you intend to chase overseas growth, overseas acquisitions, overseas play versus domestic?
So Shereen, clearly today, as I said in the beginning, that India is the flavor of the world today, right? So the whole world is looking at India, and India is the growth story for coming decades. So for us to go and invest outside India when India itself gives us huge opportunity, I don't think that makes sense. When we invested in 2008-9 overseas, at that time India was passing through a little bit of a lull phase, and we felt that we need to go outside India to gain experience, understand what's happening in the world market. And for that we invested overseas, which did not go very well, but lately these assets have turned around and are doing well. But going forward, we are going to be focusing all our energies inwards in India, and we will be expanding our capacities, and mostly from brownfield and greenfield expansions rather than acquisitions, because most of the consolidation that was to happen has already happened. And what is left in the Indian market are very small steel companies, which we are not interested. Unless and until large public sector comes up for disinvestment, that would be another opportunity for us to acquire. But till then, we will be focused on our own growth.
Okay, so unless it's a large PSU that's on the block, you're not looking at acquisitions in any of your spaces within the domestic market. A contender like NMDC Steel, were that to materialize, would that be up for grabs?
Yeah, that could be a candidate, because it's a public sector undertaking. So as I mentioned, it could be, we would take a look at it.
You talked about greenfield and brownfield expansion, Mr. Jindal. The combined cash on the books as of today, as of March 2023, stands at a little over 25,800 crores. What is the ambition now as far as expansion is concerned, given the fact that you believe that we are going to see significant growth from the current levels as the Indian economy, which is your bet, continues to grow?
So as we grow, as the country grows, country would need a huge amount of steel. The Steel Ministry, Government of India has projected that India would need close to 250 million tons of steel in next 7 years, from 120 million tons last year. So which is over 100% growth. So therefore, we being the leading steel company in India, we just to keep our market share, we at least will have to double our growth, double our capacity from today. And if we want to take a larger market share, we may have to even grow more than that. So that's a huge investment, and that calls for big projects that we will have to set up, because the country would need so much steel, and there aren't many steel companies which can grow that fast to meet the growing demand of India.
Mm-hmm. By when do you anticipate that you will be able to double, or in fact more than double, your capacity? And if you can leave me with a ballpark investment figure, because as you pointed out yourself, it will require significant capital. What could that mean, and potentially what's the time period that we're looking at for you to double capacity?
So if you want to go into the numbers, right now we are at 28 million tons, and our idea is to go over 50 million tons by 2030, which means that we will be increasing our capacity by 40%, if not 50%, or if doubling. At least 40%, that means 23 million tons capacity we will be adding. The thumb rule in steel industry is that for every million tons, you have to invest at least $1 billion, if not more. So therefore, we are talking about close to $25 billion in the next 7 years.
$25 billion in the next 7 years, 50 million tons by 2030. That's the aspiration as far as the steel side is concerned. But if I may ask you about cement and paints, and specifically as far as paints is concerned, are you satisfied with the performance that you've been able to achieve? What's the target now, near term for FY24 and long term by 2030? And the cement side, a possible listing anytime soon?
So paint, as you said, that it's the consumer-facing business, and this is our first consumer-facing business in the group, and therefore whatever has been achieved is pretty satisfactory. I mean, I was not expecting that we will be doing that much, but the team has done an excellent job, and it's on its way, and it's doing very well. We are in fact doubling the capacity. There are already talks of building 2 more new paint plants in India. So therefore, that's a satisfactory progress. On cement, because JSW cement is a green cement, it uses a lot of slag from the steel plants and fly ash from our power plants. So therefore, it's a very natural fit that cement business is, and it's kind of doing very well. It's growing and keeping the pace with our other business growths. So therefore, both the businesses are doing well. On the IPO for cement, there is a plan both for the infra and for cement to do IPO over the next couple of years. And if environment is good, probably we'll do the IPO of cement as well.
Okay, let me ask you about paints, just coming back to that, because I believe that the internal target is to grab a 10% market share by FY26, on course to do that. And you also talked about adding capacity. Is that also just going to be greenfield, or are you looking at potential acquisitions on the paint side?
No, mostly it will be greenfield expansion, because paint side acquisitions are, I don't know if there are any great opportunity in the paint industry for acquisition. So it would be mostly greenfield projects.
Okay,
and you asked me about the expansion. 10%.
Yes, 10% market share, sir.
Go ahead, Shereen. Yeah. So yeah, no, that is an ambition. That ambition one must have, and therefore the team is highly charged and are really working to get to the 10% market share by 2026.
Okay. You talked about significant investment and expansion plans across each of your different businesses involving billions of dollars. Just for steel, as you pointed out, $25 billion by 2030 is the expectation in terms of investments. If I were to take a look at the aggregate debt of JSW Steel and Energy, it's at about 1.06 lakh crores. Up from 50,000 crores in FY18. Would you need to take on a significant additional debt to be able to fund these expansion and investment plans?
So I don't know whether these debt numbers are correct. Is it the net debt or is it gross debt? But anyway, or whatever it is, you must have checked, I'm sure. The steel business will not increase the net debt position. It will remain more or less in the ballpark. And whereas the energy business, because the renewable energy is a utility business and it's an infrastructure business where the debt equity ratios are always levered. So therefore, we will probably have more debt as we grow our renewable business.
You know, Mr. Jindal, I read out the citation that was part of the presentation when you were awarded the EY Entrepreneur of the Year award, and it talked about how you've been able to adeptly manage complex, large projects. I want to understand from you, through the course of your career of greenfield expansion, taking on distressed assets and integrating them into the business, what have been the key learnings? What has been the biggest challenge that you've had to overcome? But what's also been the most significant learning for you as an entrepreneur?
So building greenfield large project is always very challenging, and it encompasses every facet of life. And building a steel plant from scratch is a very tough ask. But it was a journey where we went through ups and downs and difficulties and lots of enjoyment. So it was very interesting, and I, being a technical person, I really enjoyed every moment of building the steel plant. On acquiring stress assets and converting them into profitable ventures is a different ball game. That doesn't call for that kind of hard work or that kind of dedication, because that's easier. It's an already existing site with existing infrastructure. You just need to fix the team. You need to fix the technology. If there are some glitches in the technology, and
Well, speaking of technology, that it's ironical that we snapped that link just when he was talking about technology, but we'll re-establish that connection with Sajjan Jindal. They're representing India at the World Entrepreneur of the Year Awards, but several headlines coming in from Sajjan Jindal, and the big one really is confirming that they are looking at MG Motors potentially for picking up a stake, could be a sizable stake, if of course MG Motors is looking to sell. But looking at getting into battery manufacturing, that's the other big headline that's come in from Sajjan Jindal, and also significant expansion plans, greenfield expansion across each of their businesses, possible IPOs for the cement as well as the infrastructure business, and looking to grow the paints business in double capacity there as well. So big moves there coming in for the JSW Group. But here's wishing Sajjan Jindal the very best of luck as he takes on 49 other entrepreneurs from different parts of the world representing India at the World Entrepreneur of the Year Awards. We will take a break. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.